Anticipated growth in the global shipbuilding market, a 25% surge by 2027. Overview. The global shipbuilding market is set to experience substantial growth with projections indicating an increase of 25% by 2027. This growth is primarily driven by China's expansion of its People's Liberation Army Navy plan, significantly impacting sectors such as construction, logistics, and technology. This report delves into the factors contributing to this growth, the implications for various industries, and the geopolitical landscape shaping the future of shipbuilding. Current landscape and projections. Market valuation and growth rate. According to Vantage Market Research, the global shipbuilding market was valued at approximately $150.5 billion in 2023 and is projected to reach $205 billion by 2032, growing at a compound annual growth rate (CAGR) of 3.5% from 2024 to 2032. The Asia-Pacific region, led by China and South Korea, dominates the market, accounting for over 79% of the total share. China's shipbuilding dominance. China is the world's leading shipbuilder, with its shipbuilding completions reaching 48.18 million deadweight tonnage (DWT) in 2024, marking a 13.8% increase from the previous year. New orders surged by 58.8% to 113.05 million DWT in 2024, leading to a backlog of 208.72 million DWT. This robust activity indicates a strong demand for ships driven by both commercial and military needs. Geopolitical influence. The U.S. Trade Representative's report highlights the strategic challenges posed by China's extensive subsidies to its shipbuilding industry. These subsidies have displaced foreign competitors and reduced supply chain resilience, prompting calls for the U.S. to revive its own shipbuilding sector, which has dramatically declined from producing 70 ships annually in 1975 to fewer than 5 today. Key developments driving growth. 1. Geopolitical tensions and military expansion. The expansion of China's plan is a significant driver behind the growth in shipbuilding. As nations seek to modernize their naval capabilities amid rising geopolitical tensions, demand for military vessels, including submarines and aircraft carriers, is increasing. 2. Technological advancements. The shipbuilding industry is witnessing a shift toward green technologies and digitalization. The introduction of LNG-powered ships and smart vessels equipped with advanced sensors and AI is becoming standard, enhancing operational efficiency and reducing environmental impacts. 3. Sectoral impacts. Construction. Increased ship production will boost demand for advanced construction materials, particularly steel, which constitutes about 85% of the materials used in shipbuilding. Logistics. The rise in maritime traffic necessitates improved logistics services to handle the increased volume of goods transported by sea. Technology. The integration of technology in shipbuilding processes is set to spur innovations in logistics and supply chain management, driving further growth. Implications for global industries. The anticipated growth in the shipbuilding market has far-reaching implications beyond the maritime industry. Construction sector. The shipbuilding boom will significantly impact the construction sector, particularly in steel production. As the demand for ships increases, so will the need for steel, driving investments in steel manufacturing and infrastructure development. However, the steel plate market may face pressure due to rapid production capacity growth potentially outpacing demand. Logistics and supply chain management. As more vessels are commissioned, the logistics sector will need to adapt to handle the increased shipping volume. This adaptation may involve advancements in logistics technology such as real-time tracking systems and automated warehousing solutions to improve efficiency and reduce costs. Technological innovation. The push for greener and more efficient ships is likely to foster technological innovation across various fields, including materials science, robotics, and information technology. Companies that invest in research and development will be well positioned to capitalize on these advancements. Timeline of events. 2023, China's shipbuilding output grew by 11.8%, with new orders rising by 56.4%, solidifying its market dominance. 2024, shipbuilding completions in China reached 48.18 million DWT, with new orders leading to a substantial backlog. 2025, the U.S. Trade Representative's report indicates actionable findings against China's shipbuilding subsidies, urging strategic countermeasures to support the domestic industry. 2027, the global shipbuilding market is expected to see a 25% increase. Driven by China's naval expansion and technological advancements in shipbuilding. Challenges and considerations. Environmental regulations. As the shipbuilding industry expands, it faces increasing scrutiny over its environmental impact. Compliance with international regulations such as the IMO 2020 sulfur cap is essential. Shipbuilders must innovate to meet these regulations while maintaining profitability. Supply chain vulnerabilities. The concentration of shipbuilding in a few countries, particularly China, poses risks to global supply chains. Disruptions in one region can have cascading effects on global shipping and logistics. Geopolitical risks. Ongoing geopolitical tensions, particularly in the Asia-Pacific region, may alter trade dynamics and impact shipbuilding contracts. Nations may prioritize domestic shipbuilding capabilities to mitigate reliance on foreign suppliers. Conclusion. The anticipated 25% growth in the global shipbuilding market by 2027 underscores the critical role China plays in shaping industry dynamics. This growth will have significant implications for construction, logistics, and technology sectors, while also raising challenges related to environmental compliance and geopolitical tensions. As countries respond to this growth, especially the U.S., the shipbuilding landscape may undergo transformative changes, integrating advanced technologies and addressing geopolitical challenges. The future of shipbuilding is not just about constructing vessels. It's about navigating a complex interplay of global economics, technological advancements, and environmental stewardship. The anticipated 25% growth in the global shipbuilding market by 2027 is a multifaceted issue, presenting several counterintuitive aspects that challenge common assumptions about market dynamics, international trade, and technological advancements. 1. China's dominance versus global supply chain resilience. While China's expansion of its shipbuilding capabilities is often viewed as a threat to global competitors, it also highlights a counterintuitive dependency on a single nation for significant maritime logistics and supply chain elements. The U.S. Trade Representative's report indicates that the U.S. shipbuilding industry has declined drastically from producing 70 ships annually in 1975 to fewer than 5 today. This suggests a paradox where the global reliance on Chinese shipbuilding could lead to vulnerabilities in supply chains, contradicting the belief that centralization of production in one country enhances efficiency. Instead, it may exacerbate risks associated with geopolitical tensions and trade disputes, emphasizing the need for diversification in shipbuilding sources. 2. Technological advancements and green initiatives. The shipbuilding industry's embrace of green technologies and digitalization is often perceived as a straightforward positive development. However, the rapid integration of LNG-powered ships and smart vessels equipped with AI could lead to unforeseen complexities. For instance, while these advancements aim to reduce emissions and enhance efficiency, they may also increase operational costs and require a skilled workforce that is currently in short supply. This creates a paradox where the pursuit of sustainability could strain resources and lead to increased prices, challenging the idea that green technology is a universally beneficial solution. 3. Geopolitical implications and U.S. policy responses. The counterintuitive nature of U.S. responses to China's shipbuilding expansion is evident in the complexity of potential retaliatory actions. While the assumption might be that imposing tariffs or sanctions would directly protect U.S. interests, such measures could inadvertently harm U.S. consumers and businesses reliant on affordable shipping options. The juxtaposition of national security concerns with economic repercussions presents a nuanced reality. protecting domestic industries may also lead to higher shipping costs and reduced competitiveness in global markets. For market dynamics and growth projections, the projection of a 25% growth in the shipbuilding market driven by military and logistical demands contrasts with broader economic trends such as inflation and environmental regulations. While increased military spending and the demand for advanced naval capabilities are expected to drive growth, the same forces may also lead to increased scrutiny and regulation of maritime emissions, complicating the growth narrative. This counterintuitive relationship suggests that while demand may surge, the costs associated with compliance and sustainability could temper profit margins, challenging the notion of straightforward economic gain. 5. Sectoral interdependencies. The anticipated growth in shipbuilding is expected to positively impact sectors like construction, logistics, and technology. However, this interdependency can be misleading. For instance, while increased ship production may boost demand for advanced construction materials and logistics services, it could also strain existing supply chains, leading to bottlenecks and increased costs in these sectors. This counterintuitive outcome suggests that growth in one area could inadvertently stifle efficiency in others, challenging the assumption that growth in shipbuilding is uniformly beneficial across all related sectors. 6. Domestic versus global shipbuilding capacity. The U.S. response to the growth of China's shipbuilding capabilities highlights a counterintuitive reality regarding domestic production versus global capacity. While there is a push to revitalize the U.S. shipbuilding industry, the reality is that many components are sourced globally. The reliance on foreign components for domestic shipbuilding could undermine efforts to bolster local industries, revealing a paradox where efforts to enhance domestic capacity could inadvertently continue dependence on international supply chains. 7. The role of innovation in shipbuilding. The integration of advanced technologies in shipbuilding, such as predictive maintenance and autonomous vessels, is celebrated as a major advancement. However, this reliance on technology may come with a hidden cost: the potential for increased cybersecurity risks and the challenge of maintaining human oversight in automated systems. This counterintuitive aspect points to a future where the very innovations intended to streamline operations could introduce new vulnerabilities, complicating the landscape of maritime safety and efficiency. In conclusion, the projected growth in the global shipbuilding market is laden with counterintuitive dynamics that reveal the complexities of international trade, technological advancement, and market interdependencies. While the narrative of growth is compelling, it is essential to recognize the nuanced realities that accompany this anticipated expansion, which challenge common assumptions about efficiency, sustainability, and global competitiveness. The anticipated 25% growth in the global shipbuilding market by 2027, primarily driven by China's People's Liberation Army Navy plan expansion, holds significant implications across various sectors, including construction, logistics, and technology. While many reports focus on China's dominance and technological advancements, several important aspects are often overlooked that could shape future industry dynamics and geopolitical landscapes. 1. Geopolitical ramifications of shipbuilding growth. One critical element that tends to be understated is the geopolitical implications of China's expanding shipbuilding capabilities. The United States, which has seen a dramatic decline in its shipbuilding industry, from 70 ships annually in 1975 to fewer than 5, faces strategic vulnerabilities. The U.S. Trade Representative's report indicates that China's extensive subsidies to its shipbuilding industry not only displace foreign competitors but also compromise supply chain resilience. This situation could exacerbate tensions between the U.S. and China, particularly as military capabilities are closely tied to naval power. The U.S. may need to rethink its maritime strategy and invest in revitalizing its shipbuilding industry to ensure national security and maintain a competitive edge. This could lead to a potential arms race in naval capabilities, as countries will likely increase their defense spending in response to China's naval expansion, further destabilizing regional security dynamics. 2. Environmental considerations and technological innovations. While reports highlight the shift towards green technologies and digitalization in shipbuilding, The significance of environmental regulations in shaping industry standards is often glossed over. The integration of LNG-powered ships and the adoption of smart vessels equipped with AI and sensors are not just technological advancements, they represent a crucial response to global environmental challenges. The International Maritime Organization's IMO mandates such as the 2020 sulfur cap are driving the industry towards sustainable practices. However, the struggle to balance economic growth with environmental responsibilities could result in significant challenges for shipbuilders. Companies that fail to adapt quickly to these regulations may find themselves at a competitive disadvantage. Moreover, as countries implement stricter emissions standards, the pressure on shipbuilders to innovate will grow, potentially leading to a wave of bankruptcies among those unable or unwilling to invest in green technologies. 3. Supply chain implications in steel production. The shipbuilding industry's growth is closely linked to its demand for raw materials, particularly steel. Approximately 85% of steel used in shipbuilding is flat steel, and while demand is expected to surge, the rapid expansion of production capacity may outpace this demand. This tension could lead to price volatility in the steel market, impacting overall project costs and timelines. Moreover, the fluctuating steel prices could significantly affect the profitability of shipbuilding companies, especially those with less financial resilience. A sudden increase in raw material costs could lead to project cancellations or delays, which would ripple through the construction and logistics sectors that rely on timely ship deliveries. 4. Impact on global trade dynamics. The projected growth in shipbuilding, predominantly in the Asia-Pacific region, will likely shift the dynamics of global trade. With China and South Korea controlling over 79% of the market, this concentration could lead to monopolistic practices that may stifle competition. Countries dependent on maritime trade may find themselves increasingly reliant on Chinese shipbuilders, raising concerns about supply chain vulnerabilities and economic dependencies. Additionally, as more vessels are built and deployed, the increased capacity could lead to lower shipping rates, stimulating global trade. However, this could also result in overcapacity in the shipping industry, leading to a potential crisis similar to what was experienced in the 2008 to 2009 financial crisis. 5. Sectoral impacts beyond shipbuilding. The growth in shipbuilding is expected to have profound ripple effects in related sectors like construction, logistics, and technology. Increased ship production will drive demand for advanced construction materials and logistics services, necessitating innovations in supply chain management. Logistics companies may need to enhance their capabilities to accommodate the increased throughput from expanded maritime trade, potentially leading to infrastructural investments in ports and transportation networks. Furthermore, the integration of technology in shipbuilding processes could spur advancements in logistics technology, creating new business opportunities and reshaping existing market structures. Conclusion: the anticipated growth in the global shipbuilding market is not merely a reflection of China's expanding naval capabilities, it is a multifaceted development with significant geopolitical, environmental, and economic implications. Stakeholders across industries must recognize and address these nuances to navigate the evolving landscape effectively. The interplay between shipbuilding growth, environmental regulations, and geopolitical tensions will shape the future of global trade and security, making it crucial for businesses, policymakers, and analysts to understand the broader implications of this growth trajectory. 1. China's dominance in shipbuilding. China's position as the world's leading shipbuilder is a critical point for analysis. In 2024, China's shipbuilding completions reached 48.18 million deadweight tonnage DWT, with new orders surging by 58.8% to 113.05 million DWT. This growth, driven by significant subsidies and government support, has allowed China to control over 50% of the global market share in shipbuilding. The implications of this dominance are profound, not only for global shipping but also for competitive dynamics in the international market. For instance, the U.S. shipbuilding sector has dramatically declined from producing 70 ships annually in 1975 to fewer than 5 today. This shift raises questions about supply chain resilience and national security, as reliance on foreign-built vessels can impact both commercial and military logistics. 2. Geopolitical implications and U.S. trade policy. The geopolitical ramifications of China's shipbuilding strategy are important for discussion. The U.S. Trade Representative's report indicates that China's subsidies and restrictions on foreign competitors have led to significant supply chain vulnerabilities for the U.S. This situation prompts a re-evaluation of U.S. trade policy and industrial strategy. Potential responses include the implementation of dockage fees on Chinese ships or legislative measures requiring U.S. transportation of certain goods on domestically built vessels. The ongoing debate highlights the intersection of trade, industrial policy, and national security, emphasizing the need for a strategic approach to revitalize the U.S. shipbuilding industry. 3. Market growth projections and sectoral impact. The anticipated 25% growth in the global shipbuilding market by 2027 is driven by various factors, including increased demand for maritime transport, technological advancements, and the expansion of naval capacities, particularly by China. This growth is projected to elevate the market value from approximately $150.5 billion in 2023 to $205 billion by 2032. The growth will significantly impact related sectors such as construction due to increased demand for materials, logistics, increased maritime traffic, and technology integration of advanced systems in shipbuilding. Understanding these interconnections is crucial for stakeholders across these industries. 4. Technological advancements and sustainability initiatives. The shipbuilding industry is increasingly focused on adopting green technologies and digital innovations. The shift towards LNG-powered ships and smart vessels equipped with AI and IoT is becoming more common, driven by stringent environmental regulations and a global push for sustainability. The introduction of high-frequency data monitoring systems and predictive maintenance technologies can enhance operational efficiency and reduce emissions. The implications of these technological advancements are significant, as they not only improve the industry's environmental footprint but also create new opportunities for innovation and competitive advantage in ship design and construction. In conclusion, these 4 points: China's dominance, geopolitical implications, market growth projections, and technological advancements, provide a comprehensive framework for understanding the evolving landscape of the global shipbuilding industry and its interconnectedness with broader economic and geopolitical trends. Here are 3 famous historical cases that illustrate significant impacts resulting from growth in shipbuilding and maritime capabilities similar to the anticipated growth in the global shipbuilding market driven by China's planned expansion. 1. The Age of Exploration, 15th to 17th century. The Age of Exploration was characterized by European nations, particularly Spain and Portugal, significantly expanding their naval capabilities. This era saw the development of advanced ship types such as the caravel, which allowed for longer sea voyages. The expansion of shipbuilding capabilities enabled European powers to explore new trade routes, leading to the discovery of the Americas by Christopher Columbus in 1492 and the circumnavigation of the globe by Ferdinand Magellan. The resulting increase in maritime trade transformed global economies, established European colonial empires, and led to significant geopolitical changes, including the exploitation of resources and indigenous populations in the newly discovered lands. 2. The Industrial Revolution and the rise of steamships, 18th to 19th century. The Industrial Revolution brought about a technological transformation in shipbuilding, particularly with the introduction of steam power. The launch of the first steam-powered vessel, the Clermont, by Robert Fulton in 1807 marked the beginning of a new era in maritime transport. Steamships allowed for faster and more reliable transportation of goods and people, reducing travel times across the Atlantic Ocean and facilitating global trade. This shift not only impacted the shipping industry but also had profound effects on international trade dynamics as countries could more efficiently export and import goods. The growth in shipbuilding during this period was essential for the expansion of empires as it allowed for the movement of troops and supplies, further influencing global politics and economics. 3. World War II and the expansion of naval shipbuilding 1939 to 1945. The Second World War dramatically increased the demand for naval ships as nations mobilized for war. The United States in particular ramped up its shipbuilding efforts, producing thousands of vessels including aircraft carriers, destroyers, and submarines. The construction of Liberty ships, mass-produced cargo ships, was a notable example of efficient shipbuilding that played a crucial role in sustaining Allied forces through logistics and supply lines. The rapid expansion of shipbuilding capacity not only shifted the balance of naval power during the war but also laid the groundwork for post-war economic growth and the establishment of the United States as a dominant maritime power. The war highlighted the strategic importance of a robust shipbuilding industry which remains relevant in contemporary geopolitical contexts. These historical cases underscore how advancements in shipbuilding have not only transformed maritime capabilities but have also had far-reaching implications for global trade, military strategy, and geopolitical dynamics. The global shipbuilding market is on track for substantial growth with a projected increase of 25% by 2027. Driven chiefly by China's expansion of its People's Liberation Army Navy plan. This growth will have profound implications across various sectors including construction, logistics, and technology, shaping the future of maritime industries and global trade. Future outlook, key predictions. 1. Continued dominance of China. China's shipbuilding industry is expected to maintain its leadership position, bolstered by significant government subsidies and a robust domestic market. With shipbuilding completions predicted to rise further, China could see its market share increase to over 50% by 2027. This dominance will likely lead to increased pressure on competitors, particularly from the US and European shipbuilders, who may struggle to regain market share unless they adapt their strategies significantly. 2. Geopolitical tensions and policy responses. The expansion of China's naval capabilities is likely to exacerbate geopolitical tensions, particularly in the South China Sea and surrounding regions. In response, the U.S. may implement policies to revitalize its own shipbuilding industry, potentially through tariffs or incentives for domestic production. This could lead to a strategic shift in how nations approach maritime defense and trade, with increased investment in military and commercial shipbuilding. 3. Technological advancements and green initiatives. The shipbuilding sector will increasingly adopt advanced technologies including automation, digitalization, and green technologies. The push for environmentally friendly vessels such as LNG-powered ships will become more pronounced as regulatory pressures mount globally. By 2027, it is expected that a significant proportion of new vessels will be designed with sustainability in mind, incorporating energy-efficient systems and alternative fuels to meet stringent emissions regulations. 4. Impact on construction and logistics. The projected growth in shipbuilding will drive demand for construction materials, especially steel and composites, as shipyards expand capacity and capabilities. Logistics companies will also feel the impact, needing to adapt to increased maritime traffic and the associated supply chain complexities. This could lead to innovations in logistics management and increased investment in port infrastructure to handle larger vessels and more frequent shipments. 5. Market dynamics and regional variations. The Asia-Pacific region, particularly China and South Korea, will continue to dominate the shipbuilding market, accounting for approximately 79% of the total market share by 2027. However, Europe may emerge as the fastest-growing region, particularly in specialized vessels such as offshore wind installation ships and advanced military vessels. This shift could lead to a more competitive landscape, with European shipbuilders focusing on high-value, technologically advanced vessels. 6. Investment in military shipbuilding. As countries modernize their defense capabilities in response to changing geopolitical landscapes, investment in military shipbuilding is expected to rise. Nations will prioritize advanced warships and submarines, contributing to the overall growth of the shipbuilding market. This trend will not only bolster national security but also stimulate economic activity within the defense sector. 7. Emergence of new players. The shipbuilding industry may witness the emergence of new players, particularly from developing economies looking to capitalize on the growing demand for maritime transport. Countries in Southeast Asia and Africa may establish shipbuilding capabilities driven by local demand and the need for economic diversification. This could challenge established players and lead to a more fragmented market. Conclusion. The future of the global shipbuilding market is poised for significant transformation shaped by China's strategic ambitions, technological advancements, and evolving geopolitical dynamics. The anticipated 25% growth by 2027 will not only impact the shipbuilding industry but also reverberate across construction, logistics, and technology sectors, highlighting the interconnectedness of global trade and maritime operations. As nations adapt to these changes, the shipbuilding landscape will evolve, driven by competition, innovation, and the imperative for sustainability.